Good morning. I wanted to make a quick intro week update on what we have been looking at and what I'm paying attention to now. Starting off with the dollar index, we have now officially reached and passed our objective. If you remember on the last video and the last couple of videos, I was paying attention to this sell side liquidity here, this internal sell side liquidity, where I was using this fair value gap as an inversion at this point for price to support it. Use it as a resistance to push lower. So we've done exactly that, and we've capitalized on the move as well. And now looking at the daily chart, we have this inversion fair value gap. It was once a CB at this point, stretched out in time. It was disrespected here, so stretched out in time. I was looking to see if it could be used as support for some minor retracement to the upside. For example, going to my weekly chart, if we could find some sort of support from this area into this inefficiency, this CB from this low to this high, or this tiny inefficiency here, one of them, then continue lower. I'm not sure what's going to happen on the dollar index, but this may be a possibility, especially pairing it with Euro USD. And seasonally, we know that Euro is bullish during December and some of January, so if we need lower dollar for that to be the case. So yeah, we might get some sort of retracement into a high time frame PD array before a continuation to the direction that we were going. And we should not forget that we are left with 1 day for this monthly candle to close, and I don't think they would leave it without a tail of some sort. I think we might get some sort of retracement before the monthly candle closes, so I'm paying attention to this as well. But our high time frame objective has been reached here, and what am I looking for next? Well, I'm looking for anything. I'm looking for a possible shift to the upside for me to be able to take it back to the weekly inefficiencies that I pointed out just now. So if we get a shift from here, if we actually find support in this inversion fair value gap from the daily, get a shift in market structure and a possibility to take it to the consequent encroachment of the monthly fair value gap, which pairs up with a monthly CB, if you remember, in this area. So if we get something like this, I might consider it, but I'm not pushing anything, I'm not forcing anything. And then the second thing I wanted to note was on the indices, the S&P 500, for example. I mentioned at the beginning of this week that I would like to see a discount price, a discount push for me to be able to buy this, because ultimately I'm still bullish on these based on high time frame draw and liquidity. So paying attention to the weekly charts, for example, we have this buy side liquidity here, and we have that buy side liquidity up there, and we can see that's clearly what we are drawing to right now. So let's mark this out as buy side liquidity, and this is buy side liquidity. So we see that we're clearly drawing to these levels. Next, we also have this inefficiency, this tiny sell side imbalance, which price actually used in the past to push lower. So I'm not going to highlight it because there's already a buy side liquidity there, but I'd like to see a closure above it for us to continue to take out this one. So I'll pay attention to it anyway. So looking at the weekly chart, we can see we've basically not done much at this. With looking at the candle itself, I was looking for some sort of discount, at least to this fair value gap here from a weekly perspective. I was looking for a minor retracement into a discount for me to take this back up. Going down to the daily, we can see that we've been slowly grinding up, we've been slowly chopping up. So if they don't give us the discount, if they don't give us the discount price for me to take it up, I'm either gonna be trading within the range. In other words, anything above the 80% of the range you can sell, anything below the 20% of the range you can buy. It's as simple as that, trading within the range, or draw out a range from high to low, and anything below the 50% is a discount, anything above is a premium. So that's trading within the range. So I could also do that, but I'm not a big fan of that. And we could see a possibility here. For example, look at this bearish candle and how we actually got a closure above it. This bearish candle, the next candle opened up, the next day opened up, and we closed above this one. We also got confirmation closures above it here as well. And notice how price is failing to break this candle, which is why I put the swing low there. It's also an internal sell side liquidity. So this candle could be what could be used to support higher prices. So we may just go from here to take out buy side liquidity, and not even bother trading to a discount, then trade higher. But if that was the case, if that happens, I'll also be paying attention to this internal buy side liquidity here. So I have two levels now inside. We could use this order block to push higher, and if that happens, then I'll set an alert at this high, because on a lower time frame, actually let's delete this order block before, because it's gonna be distracting on a lower time frame. Because if we break through this high with momentum, with push, without taking this buy side liquidity, in other words, if we, let's say, trade lower, not to an extreme discount, but let's say trade lower, push higher with speed, and close above this high, I would look for some sort of retracement, for example to the order block, or maybe 50% of the range, but some minor retracement to take out buy side liquidity. So I would not think, if they break this high and close above it on an hourly time frame without taking out the buy side liquidity, I don't see a reason for them to come back here to this swing low anymore. And basically that's us saying that the daily order block is confirmed. This bullish order block that we just highlighted is confirmed and will take price higher. So that's all I'm seeing on the indices. I'm not also a big fan of this, because again, dollar has already met its high time frame objective. If we want to see higher indices, we'd prefer to see lower dollar, and we've already mentioned how we've reached the high time frame draw on dollar. So anything can happen right now, and we can still see how range bound this is. Yes, we've grinded higher, but it's done so in a very low, high resistant liquidity manner. Let's see, and we're creating like this sort of phantom trend line here. So anytime we could just break below, or we could literally break above and continue. So I'm not the biggest fan of these market conditions, and any trade that, as part of the journals that as part of my journaling, I actually, let's edit this. Hourly closure to take it higher. Yeah, I know it's a long alert name there, but yeah. So as part of the notes that I journaled on my personal journal, I did tell myself that anything within the range, I'm not going to bother trying to hold it for long. So I'll only be scalping on a 1 minute and 5 minute time frame, because again, look at all what we've done from the 14th, meaning the last half of November. We just basically chopped around without giving the discount or a premium that we can work with. So right now, not the biggest fan of this market. I'll literally be scalping anytime I enter a trade. I'll be breaking even quickly, and I'll be taking partials quickly. I wanted to also bring up a trade that I took and ended up becoming a loss because I did not take my partials quick enough. Let me see if I can find it. Yeah, I think it's here. So this was yesterday, Tuesday, during the London session. During New York session, we traded lower into a premium, and I believe, yeah, we traded lower after this massive consolidation, spiked down, and then rejected to the upside. And I believe there was an entry on the seconds charts actually. Yeah, this place came back because this became an inversion fair value gap when we disrespected it at this point. So we came back, tested it one more time, then rejected higher. So when I saw us taking out buy side liquidity, because also on a 30 minutes chart at this point we disrespected this other block. Like we swept the high of the other block, so this other block was likely not to hold in my mind, and I'm seeing this rejection in a way. So I switched to my 1 minute chart, and let's see how it plays out. So at this point, I'm noting this bearish candle right there. I wanted this to turn into a breaker, and there. So when this was supposed to be a bullish order block, right? So when price came back to this red candle, well, it was supposed to continue doing what it was doing, supporting higher prices. But the fact that we traded below it and closed below it made it a breaker. So I had an entry at this point, literally at the low of the breaker, and we can see what happened in the next few candles. Price tested it one more time and disrespecting other bullish PDRAs and then fell off. So this happened, right? I was risking about I think my risk reward was 1 to 3, I believe, because it was something like this. Stop loss was at the high and TP were at the lows of the day. Alright, so this was my risk reward. So I was 1 to 3, and at this point I was sitting on basically 1 to 2, which means I could have taken partials and I could have moved my stop loss to break even, but I did none of those two things. I didn't do any of those two things, and watching how price played out after that was not the best, because now it became a very slow grind to the upside and then downside, and I'm watching PDRAs. I'm switching to the 5 minutes chart to see if PDRAs are still being held. Like this CB, I was looking to see if we could close below this CB to confirm more bearishness, and price traded higher, then closed higher, and yeah, we can see what happened. My stop loss got hit without taking any partials, without breaking even. So this is the problem with trading in a range. You might get the chances of getting to see some profit, and of course we can see later on price did trade lower and actually got to a reasonable point of take profit. So yeah, you might get a move to your direction only to find out it's only using a lower a discount PDRA to take it higher or something like that. So trading in a range is basically trying to tell you take partials quickly and move your stops to break even. Measure the range from high to low, see your 50% mark. Anytime you're below the 50%, know that it's a discount and price can reverse anytime. If you are buying and anytime price goes above the 50%, try to take your partials or profits, because we could reverse. And do not even focus on equal lows or equal highs, because price may leave them as equal as they are in the meantime before continuing the direction you want it to later on. So that's the issue of trading in the range. So that's what I see on the indices. Nothing really fancy. I'm waiting for that breakout and other block or breaker entry to the upside, or give us a massive discount that I can take it back up with. Moving on, because of those two conditions, the dollar has met its high time frame objective. Most of the pairs and commodities or currencies that I'm trading has already reached their target. Dollar has hit its target. Gold has grinded higher and higher and hit its target also for me. Of course, my main target, my final target on this is the all-time high, which is just not too far to go. It's about 40 handles more from here to here. So I left the last runner to see if we could get to the all-time high. So yeah, gold is also pushing higher. Most of the stuff that I've traded for the week have reached the high time frame objectives. Pound has also reached, I think, its monthly or high time frame order block. That was a high time frame, yeah, it was a monthly chart. GBP USD has reached a monthly order block as well. Who knows, it could turn back from here, or it could continue going higher. Same with Euro USD, reached the high time frame PDRA. In this case, we can see the order block here has been traded well into, and the bulk of the volume, which is the body of the order block itself, has been basically violated. Not really, it's because we have not closed in this monthly candle yet. So yeah, many high time frame objectives are hit, and anything is to be expected from here, especially considering that it's the last few days of the month, I believe 2 days. So yeah, the month will be ending tomorrow, so anything is possible from here. So because of that, I was then able to shift my attention temporarily to exotic pairs. In this case, I'm looking at CAD JPY. Going down to the daily chart, because I'm not planning to hold this for a long time, just holding it for the session, I mean for the week. We have a sweeping liquidity at this point, a displacement higher. When price was trading into this order block, this bearish order block, I wanted to see if we could continue higher to take out buy side liquidity or trade lower. And now, looking at the 4-hour chart, we can see that we rejected off of that order block, which is also a lower time frame breaker, and we're now displacing lower. So if you were not sure before and you wanted to see a market structure shift or market structure break, we got that now at this point. So looking at this swing low, specific swing low, pull to the right of it, we can see yesterday at 9 a.m. so during New York session, we finally closed below it on a 4-hour perspective. So this would be our market structure shift or market structure break, right? The next thing I wanted to shift my attention to are these 3 consecutive candles. For me, that could have been an order block for higher prices. So when price came down, when price rallied up like this, came back down to it inside of this fair value gap, should have supported higher prices, but it didn't. Now that we have broken below it and closed below it, I now consider that to be a breaker. So for me, that will be a bearish breaker. So right now, going into the day and the rest of the week, I'm looking to see if price could trade into the breaker, which also has this inefficiency here, this CB, sell side imbalance. So I want to see if price can trade into the breaker and continue to the downside to clear the sell side liquidity and continue pushing lower. Of course, taking partials along the way with every swing low that we sweep. Another thing to pay attention for those that maybe want to scalp this is look up there at this H number up there. That's the high of the candle. So I'm going to check the high of this candle that starts the CB, well, that ends the CB, and the high comes at 108.747. And then looking at the high that we are in right now, it's 108.747. So basically these are perfectly equal highs on a lower time frame. So if you're a scalper, you could possibly consider taking a buy opportunity to clear these highs. Let's actually see if we can see what they look like on a lower time frame. But these are perfectly equal highs, right? Let's delete that and shift to a 5 minutes chart, and we can see it's basically this buy side liquidity here, so if you can find an opportunity on a 1 minute chart, an entry of some sort that maybe from here even that could take price higher to clear these highs. And I believe this is also part of Asia session high. Yeah, it's the New York PM high and Asia session high at the same time. So, and we are trading below midnight price. So if you could find a 1 minute market structure shift of some sort, some confirmation to enter and take it up to clear the Asia session high, then that could be a scalp entry. But I'm personally looking for the 4-hour entry, which is basically intra-week, not intra-session or intra-day. So I'm looking for this entry, a possibility of us tagging into this and continuing lower. Anyway, that's all I have for now. Make the best of your days. We're going into December, which is the last month of the year, so be safe out there in the markets and of course in real life. And to everybody out there, good luck and good trading.